Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, S&P 500 doesn't look so hot today, does it? Let's come in and take inventory of everything, shall we? Well, first of all, in the Treasuries, we're getting volatility 4.3% reading this morning. It's still pretty low. I'm really concerned about how low volatility in Treasuries is, especially since we're getting this sort of thing in the S&P 500. Like, well, okay. So they did recover most of the decline from yesterday, but then in the overnight, they really fell out. So I'm going to bet that today during the regular session, they will try to claw some of that back. But that is still a pretty devastating decline. Granted, it's not like the end of the world. I mean, look at this thing that we had on the 12th, right? So it could be way worse. Here's the Treasuries holding this range, but now at the higher end of that range. I would really like to see them. So I was reading a note from the guys at Goldman, and I think that they made a very compelling case for why the Federal Reserve will still cut interest rates in December. That the next slate of jobs data, if we actually get it, because, you know, the whole government shutdown thing and everything, but if we actually get the data, it should be weak. And the majority of the people on the committee still think that it's a cut. So I think that they will cut in December as well. And that means that this decline that we got from Powell should eventually be clawed back, I think. Well, I mean, if on a valuation basis, it would mean that. Of course, we need the flows to make it happen. So we'll see what happens. But that's kind of my take on the Treasuries right now. So I'm interested that they're kind of at the highs. Here's oil. Oil definitely having calmed down quite a bit from weeks past, right? Gold and silver still kind of quiet, although gold does kind of look to the downside at the moment. Copper is taking a little bit of a hit, and the Japanese yen, interesting. So the Japanese yen moved up a little bit overnight. Perhaps that is why the Treasuries are at the higher end of their range, but not anything too super significant. So, and the dollar's still looking kind of strong. And then Bitcoin. I tell you what, man, I've seen so much content in the past 24 hours about how the Bitcoin market is like crashing and falling apart. It's really wild how quickly they go from like all-time high to like, oh no, it's crashing, we're all gonna die. It's nuts. I tell you what. If there exists diamond hands out there, they aren't in the cryptocurrency market. No, sir. All right. So that kind of puts us at, well, and also interestingly enough, well, I don't know. So we are at the extended night range, volatility projected range first line, essentially, for the overnight. So, we could, starting from here, have a push up to the regular session move. Or we could have a reversion back to the mean, which would be back in the 19.5 area. And I think that reversion to the mean is actually probably more likely at this point. Like, well, let's see here. Let's come over. Do we have stuff today? Not quite sure why the S&P. I thought that the S&P did worse in the regular session than it did. Bowman speak. skiing overnight. There's a White House press meeting today, but it doesn't look like we have any significant economic news today. Dick Cheney, yes, that's why the S&P 500 is down. Dick Cheney, no, I know you're not saying that, but you're right, he did die. I look forward to all of the enlightening and measured conversation that we will have on the subject on Reddit. Actually, I might just avoid Reddit for a week. Hey, what I wonder what do you think they're saying about it on the Donald? $225 comments. Oh no. Anyways, is the top comment on the Donald. They don't like him. Hunting accident? Question mark. Ooh. Okay. Question. Does your indicator take into account that the volatility number can change overnight? No. It just gives you the number when you check. So if you don't open up your chart until the regular session, you know, until 6:30 or whatever, it takes the number that it gets at 6:30. It certainly could change overnight. That's for sure. Yeah. And I think that in order, if we wanted to show that, I could stick it in there. I could stick it in there, but you would have to, excuse me, you would have to keep it open the whole time, right? But I could tell it, do it, grab the number at the beginning of the extended session and grab the number at the beginning of the regular session, or the time that you specify. To be honest, though, so far I have not seen... So was there a big change in it this evening? And when I say a big change, I mean more than 0.1%. Usually aren't big changes. Whoa. The top story on Zero Hedge right now. Okay, wait, what does he say here? Especially since the number is extrapolated over 16 days or whatever. Yeah, totally. Okay, anyways, the top story, or the pinned story rather, on Zero Hedge right now is Michael Burry's 13F, 18% is Palantir and NVIDIA puts. So that explains maybe his tweets. He came back out and tweeted stuff. He is short NVIDIA. Man, I don't like that trade. I mean, I think ultimately he's right. Well, I don't know about NVIDIA. I mean, like, people are buying their chips and everything. And if we went down, like if there was a real crash in the AI market, how badly would NVIDIA be hurt? I mean, they would be hurt, but I don't think that it would be like they go to zero or anything, right? So I kind of question the upside on that trade compared to the risk, right? It's not that it's wrong that like NVIDIA won't get hurt. It's the amount of money that you could potentially make off of a trade like that, I think probably pales in comparison to the amount of money that you would stand to lose. You know, it just makes me think about things related to autism. I saw this TikTok yesterday from a person about autism. They were like, why are right-wing people talking about autism in this way? Yada, yada, yada. And basically he went into this long conspiracy theory about how they want to remove all of the autistic people from the gene pool and all of this sort of stuff. Which I think is pretty ridiculous, frankly. And it's really common for people on the spectrum to see patterns or make correlations that don't actually exist, right? Like we as humans overall have this tendency to, like, if you give somebody random data, they'll still see a pattern in it, right? And autistic people are particularly prone to this. Even though autistic people are also kind of less likely to just go along with the program. So it's kind of weird. You kind of get this person that, like, in some ways is hard to manipulate, but in other ways is easier to manipulate. And Michael Burry is definitely autistic, right? And I think that, you know, he caught a really good one, but then he's also made a lot of plays since then that were frankly dumb. You know? Even though I think overall his fund has still made money, right? Let's look that up. Maybe ChatGPT can tell us. How do you spell his last name? 2 R's, Burry. See if ChatGPT can do it. It might have trouble with this one. This is the sort of question that I find ChatGPT can struggle with. I'd be like, oh, I can't really say that. Oh, okay. Burry's hedge fund, Scion Capital, which he ran until about 2008, produced a very large gain in the lead up and during the financial crisis. From November 2000 to 2008, they achieved a 489% cumulative return versus only 3% for the S&P 500 in that same stretch. In 2008, his credit default swap short of subprime mortgage securities generated massive profit. One source reports over $700 million for investors and about $100 million to Burry personally. After 2008, the business reformed as Scion Asset Management from 2013 onwards. According to one tracking service, Scion's top 20 weighted holdings had a 3-year annualized return of 34% and a cumulative 140. No way. Wow. Another shows that since January 2016, the portfolio is plus 37.25, not annualized, and the 3-year annualized return 48.65. A copy trade strategy based on Burry's holdings from 2016 onwards yields a backtest CGAR of 29.18 annualized with large drawdowns. When compared to benchmarks, according to ETF.com. Okay. So I see what's going on here. Is he takes a lot of big bets, and that's a pretty big bet, and he could lose like 50%, but then he makes another bet that does really well, and he'll make way more than that. But it is not a continual super fund with seamless growth every year for many. Yeah. I'm thinking about have to hold puts while seeing billion-dollar deals made with what it feels like every day. Yeah, but why did we have such a large decline overnight? This is a little bit. New U.S. Secretary of Defense said he will be at the Supreme Court to emphasize the importance of tariffs. Panama Canal. Without a clear driver. Yeah. There no. European bourses opened lower across the board without a clear driver. As the morning progressed, indices continued to slip and now generally reside at troughs. Everyone is saying that earnings are disappointing investors despite beating expectations and concern of circular funding growth larger. Does men meet? Well, I think my understanding of it is that overall companies have largely disappointed, but that the key movers in this market, like the big tech companies, have done okay. Treasuries are flying against the Zuck. I think that's sarcasm. Hey, I picked up on sarcasm quickly. Yeah, I mean, I really think that this is going to be like it for us in the Treasuries. It's going to be really, really dull until all of a sudden this thing just starts going nuts. Because this degree of volatility suppression in the Treasuries never ends well, does it? And I'm not quite sure what's causing it right now, but it's a real problem. Okay, so I was thinking about there's this person on TikTok that has okay content, but I kind of think that they have kind of stumbled onto some of the answers and they don't really actually understand the market at a deep level. Because their whole point was that you can't gain anything from a chart because it's past data and you need forward thinking data. So and I think that what he's implying is that you need to incorporate fundamental data points into your quantitative strategy. But there's momentum. And he was trashing on momentum, which is I mean, look, momentum doesn't always do well, but it has a very long history of outperformance. And it's probably the most well-studied quantitative strategy, profitable quantitative strategy that we know of. Straight up. And that is all based on past data, essentially, right? It doesn't make money because it's predictive. But still, I think that that's kind of a key point there that contradicts what he's saying, and he was trashing on it, and I can't get over it's a little disappointing because I don't really think, and he talks about he's made all of these profitable strategies and everything, but he's in this room with nothing in it. Shit, it's just, I don't actually think he's making that much from it. There's this other guy on TikTok. Oh, what's this guy's name? I should tell you this other guy. Anson PhD. Off Anson. PROFANSON. And I'm not exactly sure what his area of specialties is. He is a university professor in finance of some sort, and that guy really knows what he's talking about, and I really like his stuff. Musk tweeted a picture of the NYC ballot and their elections are a joke. I didn't see that. Let me see if I can find it. What? Candidates are listed more than once? Are you kidding me? Given that he's on the ballot twice, maybe he can win twice too. My gosh. Oh, wow. Oh, actually, that's actually kind of interesting. So yesterday, oh my gosh, because I kept saying his name is Curtis Silva. And like, I swear that I picked that up from like way back in the day when I would still listen to the radio and he would like take over Sean Hannity's show or whatever. But then I was watching the Saturday Night Live skit about the mayor race, which was actually pretty funny, and realized that it is pronounced Sliwa. And I felt so embarrassed because I've said his name like that here on stream multiple times. Wrong. Saliwa. Kumo's like way at the back. That's interesting. Man. There's these times where like I really hate social media sometimes, and yet I can't wait to read the internet, what they say when Mondami wins. Let's still say if. I mean, he's probably gonna win, but let's try and be optimistic if he wins. Okay. There's one of the things we were talking about yesterday was like the number of people that were saying they would leave New York was pretty stunning. Granted, there's lots of people that say like, oh, we're going to leave, and then they never do, right? But might be different this time. I don't know. I guess it depends. You know what it's going to be is like he's going to get put in, and then it's going to depend on what initiatives he does, right? And if he puts in initiatives that really hurt the housing market or really hurt the crime rate, then people will leave. Yeah. But you can see like most of the let's say the Twitterati, even though the Twitterati is a completely different thing now, but the kind of people that are famous and are on Twitter and will occasionally opine on politics like Elon Musk are talking about that a lot. Wow. Multiple bomb threats called into New Jersey polling places. That's... I mean, one of the things that concerns me here about like what we're seeing in the politics right now, Democrats especially seem really obsessed with like how does the midterms go, you know, and they could potentially flip the House, but only just barely, and they can maybe equalize the House. So like the net change that the midterms would have on policy is pretty much nil. And they are like treating it like life and death already a year out. That's concerning. You've got a group of people that are way too engaged in this and are prone to violence. Concerning. Whereas Republicans, I think that a part of the reason that Republicans want to talk about Mamdani so much is because of the Republican doomsayer complex, right? Like they're primarily interested in talking about it so that when it goes terribly awry, they can say, "See, I told you so." Right? Republicans are really good at looking back and saying, "Well, you made this mistake and this mistake and this mistake." But then when they actually get into power, it's like, did they do that amazing of a job? No, they don't. The pendulum is going to swing back twice as hard, and they aren't afraid to use the power that they'll get, much unlike Republicans. Well, I do think the if Democrats, so Democrats would have to own the House, the Senate, and the presidency. But if they owned all three, they absolutely would try and expand the Supreme Court. I think so. But you know what? I really don't think that that's going to happen. Yeah, if they owned both, would they try and impeach Trump again? I think that it would be ill-advised, but probably they would try, right? But I think that it would also just be like more political theater. I don't know if they, because for impeachment you still need like the 2/3, right? Like for conviction. So it's kind of a foolish play. Every week a new judge runs the country. The whole thing with snaps, well, like Donald Trump's reaction to the ruling on snaps funds is kind of funny. So like, okay, this judge ruled that we have to pay it out, but like the money literally doesn't exist. So what are we supposed to do? Well, since we're talking about politics, can I pontificate here for a second about politics? I really think that the Democrat Party is tactically inept right now. When it was Obama, it always seemed like every move that they made was so carefully calculated and several steps ahead, and it always just really bothered me the way that they're able to twist the rules and use things to their advantage in ways that really weren't intended in the first place. And now, ever since Donald Trump came along, they've just been completely inept and doing stupid things at every turn. And it seems like that the people running the show over there in the Democrat Party get dumber and dumber as well. Like, quite frankly, I think that sometimes we underestimate Ocasio-Cortez, but she is not the tactician. She just is not. And this whole thing that's going on with the government shutdown. So I was reading a bunch of stuff about it, because polling numbers amongst Republicans is going down. But so is polling amongst Democrats. Basically, like the government shutdown hurts everybody, and nobody benefits from it. But it seems there is some evidence, at least. I wouldn't say that it's super clear or undisputed, but it seems that Democrats are actually hurting more. And I think in the long run, especially, that the shutdown hurts Democrats more. And I'll tell you why. Because they have this whole idea that we're going to show America that we are fighting for their health care. That's the whole idea here, right? But what's really happening, the way that people are actually going to see it, is the Democrats shut the government down so that they can give more money to healthcare companies, right? Like, they're not protecting your healthcare. They're propping up a system that Americans hate and that came from Democrats. Like, at this point, Does anybody actually like Obamacare? Like, insurance premiums are set to rise 20-40% off of this. Like, that's how much they're subsidizing it now just since COVID, just in 5 years. That is nuts. That is absolutely crazy. I already spend way too much on my healthcare. Way too much on my healthcare, only to get the runaround from the insurance company on like literally every claim. Right? And Democrats are just shutting the government down to keep that system going. You see what I mean? And this hits directly at the Democrats' biggest problem, which is that they have a credibility problem with the American people. Nobody believes that Democrats are actually doing what they believe is right or what would be the best thing for Americans. They are doing things to play political games and to try and gain a political advantage. And it's so clear with this because Democrats don't actually want Obamacare. They want a socialized healthcare system. And they're just propping this thing up as a tactic, as a political tactic. And it's funny to see them running into the issues with it at every step. Like with SNAPs, it's the same thing. Here we're finding out the percentage of people on SNAPs is really alarming, frankly. And I'm not saying that like people don't need SNAPs and that it's a program that shouldn't exist, but there's a big problem if that many people are on SNAPs, right? And apparently under Biden, it increased like 40%. The number of people on SNAPs increased 40%. That's crazy, right? And so here again, it's not that the Democrats care about you. It's just a political pawn to them. And it's just like it's becoming more and more clear to people. And so probably what will happen, I think, it hurts both parties. They end the shutdown. Republican polling will probably readjust and go back to normal. And I think that Democrats won't recover. And so when I think about future elections, like yeah, maybe they'll take over the House. But I think that in order for the Democrat Party to ever do well electorally again, there's going to have to be a more serious shift in the party. Which is to say, you're going to have a completely different group of people come in with radically different ideas that aren't just socialism, essentially. And how likely do you think that actually is to happen? It might take them a really long time to finally figure it out and make the shift, right? Which means I still think the most likely thing is that Republicans maintain an edge, let's say, in electoral politics for probably the next 10 years. A lot of people don't understand that dynamic. They read it as prices are higher because socialism isn't an argument against people who believe it's a solution. No, well, I think that for that group of people, though, they just get mad because we don't have a socialized healthcare system and the Democrats aren't doing enough to make it happen. Still doesn't help them, you know? But you're an evil monster to not have food. I mean, man, I don't know if I've gotten to the point where I would qualify for food stamps. I think I would rather go hungry. Well, we have in Utah, we have many other programs. And I rely on that in family if it comes to that. But we got like 6 months saved up, so I think we're okay. I don't know. There is a lot of interesting discussion about the food stamps because there's a lot of like, well, why does this person qualify for food stamps? And why does this person qualify for food stamps? Like, and there were some people on food stamps, like, thumbing their nose at everybody, too. Like, that was a thing. But then there's this other thing, like, oh, well, these people shouldn't have it. But then when you actually look at, like, who does get food stamps, it's like a lot of them are caretakers. You know, a lot of them are people that they're taking care of a spouse or a family member that requires 24/7 care, and so they can't really work. That's a lot of them. So, you know, there is a very good reason. Like, there are good uses of it, let's say. But it is just like the number of people overall and the apparent explosion in it is deeply, deeply disturbing. Food stamps are corporate subsidies for junk food producers. Well, most of it does go to Walmart. And if you're buying cheap food, you probably do. I mean, here's the issue is that if you're in that situation, people that are poor, kind of the odd conundrum is that people who are poor don't necessarily have all the time in the world. A person that's poor but is working and trying does not have any time at all, right? And so they don't have the time to come in and spend 90 minutes making dinner, for instance. So they are going to be more prone to buying food that is more processed, right? But like, I know for me, one of the issues is my autistic son insists on having Dr. Pepper. And if you get rid of it, it's just a nightmare. And then there's this whole thing like, well, but you're not allowed to have it if you're on snaps. So I'm like, we gotta wean him off it in case we have to go on snaps. He has good taste. Well, I think his mom likes the Dr. Pepper, and I think that she just passed the style on to them. Honestly, I think that it may be self-medicating to him. Like, ultimately, he probably should be on Adderall, and I don't know how to get it to where he would be, because nobody wants to do anything at that age. And like, we had this thing. So like, one thing that happened was they did an assessment for speech, I think it was, and the health insurance was supposed to cover it, and then it didn't. And so that was like $1,000 for us, just for like the assessment, right? So I can't necessarily just go and start treatment if the insurance isn't going to cover it, right? It seems to me that he is smart enough to speak. He just can't figure out how to move his mouth and his tongue, and he just needs somebody to teach him, and he could speak. And that's probably one of the things that would be the biggest benefit from being able to find a full-time job, unfortunately. So now Bloomberg is tweeting the story about New Jersey authorities responded to bomb threats at polling stations in 7 counties, prompting temporary closures as voting began, according to State Attorney General Matthew Platkin. What's Charlie Gasparino saying here? Second. Let's see here. Andrew Kaczynski, CNN's latest poll shows Trump disapproval rating at 63%, the highest of either term, and 1 point above his previous high of 62 as he was leaving office in January of 2021. Wow, really? even more unpopular than when it was like the January 6th thing. Okay. Charlie Jasperino, the weak underbelly of the Trump presidency is what the tariffs are doing to working class voters who don't speculate in markets. There is some latent inflation. Prices for basic goods remain elevated, and the tariffs make them sticky on the upside. Employment gains are good, but not great. AI productivity helps, but they carry wicked short-term risks in terms of unemployment. For Trump, this needs to get sorted before the midterms. So one of my squawks retweeted that. So that's kind of curious that they think. Because Charlie would be the kind of person that would have like an inside track on that sort of thing. Can you give some data on level 3 data? Don't worry about it. So level 3 data is just like level 2 data, but across multiple exchanges. So there's certainly some informational content and stuff that you would get on it, but it's really not something that you as a regular person can really effectively incorporate. And a lot of gurus out there and people pushing stuff will bring up level 3 data to kind of get you, like, to draw you in. To be like, oh, here's something that I didn't know about. And the issue with it is that then you go, oh, well, so maybe I should be getting level 3 data and be using it. And but as a retail trader, like day trading, I don't really think it's practical. If you were programming stuff, then that'd be a different issue, right? Does seem like I am seeing some discussion on Twitter today about Trump's popularity numbers. But I think it's really, really simple. The economy's not doing well. Period. And a lot of people, the only reason they were interested in Trump in the first place was because he was supposed to fix the trade imbalance, the issues with China, and doesn't seem to be working so far. What kind of programs do you actively use if not a secret? Well, so I am primarily looking for informational inefficiencies, right? So you gotta understand that all orders will have an impact on the price. So, you know, that means that information that is already out there has a tendency to try and price itself in, but the market is also not perfectly efficient, right? So if you collect all of this information, you can find these situations where you know that there's going to be a big imbalance in the orders in the near future and take advantage of that. But in order to see an imbalance like that, you have to be informed. Like, you have to know all of the data. You have to be reading the news, have your news squawks up, these sorts of things. And then once you have a full, you know, picture of the information that's out there and the players in the market that day and everything, then you can navigate yourself a successful trade. What most retail traders are trying to do is look at a 1-minute chart and based on the patterns that they're seeing in the 1-minute chart, try and make trades off of it. That's just probably never going to work. You might have some periods where it kind of seems like it goes okay, but overall, there's just too much noise. It's mostly random on that time period, what you're seeing in price. So you have to look underneath the covers. You have to look at the data and the orders and what are those actually doing to make decisions. So I really like, that's like a really deep explanation, but honestly, we overcomplicate it. How do you make a good trade? Know what's going to happen. It's that simple. Know what's going to happen and trade in the direction of, you know, And what's going to happen is the orders are going to come in. And how do you know that? Because you know things. You think that X thing is going to happen and you predicted it ahead of time. It is speculation. It is speculation, which is really, to me, the most pure and simple form of trading that there is. So really what happened is we are all distracted from what trading really should be because of all this technical stuff, and then we get distracted into all this technical stuff that doesn't actually work. Well, there are quant strategies out there, but they tend to be either of the variety of high frequency trading where you really need a robot to do it, or portfolio level strategies, which are really high time frame and require a lot of capital. It always seems like a joke to people I tell about our great Pritzker of, is that how I say his name? Pritzker of Illinois is protecting us from Trump and his taxes. Illinois is the only state separating from the federal tax cut. Yeah. Oh, this is another thing that's going on in the Democrat Party. It's almost like it's like a new Confederacy. They think that they can just completely separate from, man. They'll try it, yes. But the whole okay. That whole idea has a bunch of real practical issues. We don't really know, like, how would that work out? Because for starters, the states don't collect federal income, right? That's collected when you do your taxes, right? So, like, companies in Illinois could choose to not collect the payroll taxes and stuff, I suppose. And individuals could refuse to file federal taxes. And then those individuals are going to get cut off, right? This is like, just because the state says that they're doing that doesn't mean that it happens. Yeah, no, I understand that it passed, but how are they going to enforce that? You get what I mean? Like, you can say, we're separating our federal budget, whatever, yada, yada, yada. But the federal government is still going to collect taxes from people. Right? And so really then all you're doing is just, there might be transfers between the state and the federal government. And then that just means that the federal government will not be making any of those transactions with them, and that would probably hurt them overall. Even if they tend to contribute more than they pull out, if they're not pulling out anything, that's still going to hurt them. And that's interesting. I haven't seen a story about that yet, though. Paul, I don't think you're listening to what I'm saying. How did that happen on Halloween? Huh? Let's see if I find a story. funny. I can't even find news stories about it. Well, I'm not saying that that it's not a thing, but what I'm saying is the reason why it's not considered big news is because it is largely a man, I'm struggling for the word here. It's an us problem. It's not going to get a lot of news because it doesn't matter. Like, it's one of those things that they pass and they can say these things, but it doesn't change anything. Right? I forget the word we use. But, you know, it'll probably get people excited. It'll probably make some voters that are far left be, like, really happy. But, like, in the larger scheme of things, it doesn't change anything. Because, why doesn't it change anything? Because states don't collect federal taxes. Well, thinking about the trading now for a second, we've had more movement than we did yesterday, but it's still a very, very tight range. We have bounced now between the buyer and seller cost basis. We're only, I mean, like, we started at the extended session projected range at 25.5, and we're only down 2 ticks. So futures slide as Palantir and cryptos tumble amid broad momentum revulsion. Maybe Palantir, the decline in Palantir might also be related to Michael Burry. They're worried that a bunch of retail traders are going to come in and go short Palantir. Yeah, the equities seem like they're going to hurt this morning. I don't know, man. Like, I would think, well, so first of all, you given the number, I got 14.83. Oh, that's just, you're giving me the VIX. Yeah, 14.83 is actually less than yesterday. I think what is most likely to happen here, this would not be a good basis for a trade, but I think what's most likely to happen is that the equities do try to claw back the overnight decline. But Palantir is, I'm really curious, like, could that be down just because they think retail traders are going to sell it now and follow Michael Burry? Well, not just retail traders, but probably lots of people. It's, yeah, and Palantir's an interesting one because I still don't feel like I understand what they do. You know? Like, every explanation for what their business is seems kind of like way amorphous and not direct. You know? And yet, and I've also always felt that the strength of that company, like it got so big because the right people were investing in it and not because it was such a great business. You know? So that's one that I think could be particularly vulnerable to shorting like that. I also find it odd that the clearest sign of like the risk off sentiment from yesterday and overnight has been cryptocurrencies selling. I also find that curious. So, but in the short term, I'm going to bet you that off of the open, there probably is going to be at least some attempt to claw back those losses. Tommy Robinson found not guilty. That's interesting, actually. Greg Abbott threatens 100% tariff on New Yorkers moving to Texas. How would that work? I mean, they could maybe actually do that one. I don't know how that would work. 7% of employees in Amazon layoffs were recruiters. Oh boy. Well, that didn't help. Oh, I was reading that from Reddit. Just browsing around, seeing if there's anything else worth talking about. I don't know, man. I feel frustrated lately because ultimately we're here, we make day trading content, and you guys that are here every day, I think you understand what's going on and you're doing it. But everybody else is just stupid and annoying to me. Some of the questions that I get asked by people sometimes, I don't know if it must be some sort of cultural divide, but some of the questions that I get asked are like, trading's not for you. Go do something else, you know. And the other content that I see about day trading, oh man, it's so bad. It's so bad, and it is so depressing to me how well some of that content does. It really is the case that pretty much anybody that actually knows what they're talking about isn't allowed to talk to you, really. And it probably isn't going to day trade. Which is not cool, because you do, it is a thing that the society needs. it used to be, like when we started, that the people that did this, futures trading specifically, was a rare breed of individual that was just extremely entrepreneuring and really put a lot of effort into what they were doing. And then COVID happened, and the explosion of quote unquote prop firms or funded trader programs. And all of a sudden you had tons of people doing it that had no clue what was going on. And they all just flocked to the dumbest, most base level of content, sharing ideas that have absolutely zero empirical backing and are just going to lose you money. And the audience is completely captured by it. So, yeah, I do post content on TikTok, but what'll happen is I'll do like 2 or 3 days of it and not get a whole lot of engagement from it. And then when I do get engagement from it, I'm annoyed by it and I lose the interest in posting it. Everyone is a quote trader. Like, why is my chiropractor talking about fair? Yeah. So one of the things that keeps coming up for me when I'm trying to learn what are some things that I can do to help our community, because ultimately, if I'm able to bring more viewers, more subscribers to the channel, that would be a net benefit to the community. I have this desire and this feeling to like not want to get bigger because sometimes, you know, there's challenges that come with being bigger and it's annoying to me sometimes. But it does help the community. It brings us more resources. It brings us more people to collaborate with. And that's where we get our best information and our ideas. So ultimately, the channel getting bigger does help all of us. Even though I say the first rule of Speculator Seth is don't talk about Speculator Seth. The reality is talking about it helps everybody here, right? And one of the things that I see very often, especially on TikTok, when people are talking about this, is like, you have to have a story. Like, people are interested in your story. Well, what is my story that would be so compelling? Well, I wanted to do this. I put a lot of time and effort into doing it. I learned some very, very technical information about the market that really explains what's going on that most retail traders don't have. And I was happy. We were doing our thing and it was fine. And then all of a sudden, this mass influx of people came into the community that had no clue what they were doing. They didn't come to our community, but they came into day trading overall and is just flooding us with nonsense. And I would just rather they all go away. That's my story. I want all of the day traders in futures to go away. And I want the government shutdown to end and interest rates to come down so it's easier for me to find a day job so that I can put more money into investing and trading and just do what I like doing instead of having to constantly deal with all of this nonsense and trying to figure out how to build up and capture the attention of idiots. That's my real story. Not very inspiring, is it? It's just really disgusting to me what this has all turned into. It really is. Like, if you're talking and you tell people you do day trading, they immediately think you're an idiot because it's basically has turned into idiots that day trade. Most of them are idiots. Wild. I guess if it comes up in a job interview, I've kind of shifted to, like, I don't say day trading, I just say we make content about financial markets. Apol says I'd find a different chiropractor. Yeah, if my chiropractor started talking about fair value gaps, I would switch chiropractors too. I stopped telling people and I just say analyst at this point. It really is a joke, man. One of the things I think is funny is the number of people out there that think that fair value gaps work, or, you know, like that may not be their thing, but they're like, you know, but like they mostly make, no, they don't. They don't make money. Like I see so many more, like the amount of loss porn that is out there now is truly mind-boggling. Like it used to be that every once in a while I would see somebody that wasted a couple $1,000s in futures trading, and you know, oh well, you know, you traded too big and you got, but now it's like a daily thing, right? The number of people that come in and try to use these smart money concepts and then crash out within 6 months is truly astounding. Like it just eclipses like everything before it. Like I take all of the people that we talked to in the futures market before 2020, right? And that all of that pales in comparison to the number of people that just straight up blow their accounts every month. Did bro? No. What happened was he blew his account. Yeah. That whole thing was really quite funny. He came in, and I think that there was two things. I'd like to think that there was two things that kind of started to hurt the popularity of, because I bet you, well, let's actually come in here. Google Trends. Smart money concepts. Not enough data. ICT. Oh, and we need to change it to past 5 years. Yeah. So if you look over the past 5 years, like it started to become way more like before this, it wasn't a search term that you could really search for. And it kind of started to get bigger. And then at the beginning of this year, like two kind of things that I can point to is one is that Delta Trend started to really get a lot of attention attacking the ICT traders, and he was pissing them off so much that he became a big creator in and of himself. And that, I think, red pilled a bunch of people. And then the other thing was that ICT blew his Robin's Cup run. Like, he was saying, oh, I'm going to do the Robin's Cup, and he was so super serious about it. And then he started doing not so well, and he's like, oh, I haven't been focusing on it. And he had all these excuses for why. It's just because he doesn't care about it anymore. But when that happened and everybody it became undeniable that he really himself can't trade, it died down really quickly. So I think we're on the tail end of it, and that this will come back down to here somewhere eventually. When I come across someone who uses ICT, I don't know if I should shut up or prod them enough to consider something else. So like, here's the thing I really struggle with, is that if people do bring that sort of thing up, you know, I don't necessarily want to say, or like, you know, they say, oh, well, I do this, and I'm not going to be like, oh, that's terrible. I'm just going to say, that's great. Good for you. That's interesting what you do. But this kind of person doesn't shut up about it. You know, they still want to talk about it, and then they'll start asking me questions. And once they start asking me questions, I have to say. So like this happened. I think the one that was the most like the best story, the most dramatic, was when there was a prop firm that went down and there was a Discord for that. And I popped in there and I just wanted to see the information, and like people immediately recognized me. So they started talking to me about it, and they started asking me questions. And so I was answering the questions, and they were like, you know, I don't understand that. It's going over my head. And I'm like, well, it's not my fault. And they didn't like that, and that's when it got kicked. What a guy coded the entire global market for us. I would think after the idea finishes making its way through third world bucket shops, it'll flatline. Yeah, it is. I mean, I think that looking for situations where there are fair value gaps in equity indexes in particular, that all of these traders are going to go in and take trades based off of. But you know, based on the overall flows, like especially if it's like end of month or something like that, that can yield pretty good trades. It's not as good as it used to be, but it's still okay. The fact that it got popular guarantees any... Well, not exactly. So you got to remember, every order has impact, right? But there's kind of... So let's talk about this. Let me go into some of this esoteric, deep stuff that the ICT traders will complain is too complicated, and I'm just trying to confuse them. But it really freaking matters, okay? The impact of a large order tends to follow a square root law, which is to say... Oh my gosh, it needs to be yellow, not black. Which is to say that the impact of an order of size Q is equal to... Sorry, it takes me a little bit here to get good at the writing on the tablet. It's equal to Y, which is a number specific to that instrument, but is consistent. So like you can calculate Y for the S&P 500 and then come back in a month and calculate it again, and the Y will be pretty similar. Y omega is the volatility times this. That is omega, right? I think that they call that symbol omega. Anyways, volatility times the square root of Q over V. And if you graph that out, it looks like this. So at first, your impact seems like it's linear, but pretty quickly you realize that actually it follows the square root line. So that means that there's kind of like an upper bound. Now, there is a place at which the order gets so big that the market becomes unhinged and it goes off like this, okay? But we don't worry about that one, okay? That's not pertinent to our... You know, you'll know when that's happening. Market's going crazy, okay? But most of the time, that's not applicable, okay? So, what does that mean? That means that if you trade X contracts and it goes Y far, that if you come in and you trade 2X contracts, it doesn't go 2Y far. It goes 1.4141, you know, the square root of 2. Okay. This leads to something kind of curious, though. Clear things out a little bit. So if you have a move and it's going like this, right? You have a large order. The impact of that order starts to reach this upper limit, right? If an opposing meta order comes in, that opposing meta order, if it's the same size, will end up having a larger impact. Okay. So here's your impact, and then there's like a short-term meta order, like mean reversion period, like this. Okay. So typically speaking, if you were to buy a ton and then immediately sell that position, you wouldn't make money because your sell would have more impact than your buy. Not because it's buying and selling, but because the second one has more impact, because you've cleared out all of the liquidity, essentially, right? So there's going to be this gap between the two where you've lost money. Okay. So what this means for like retail traders all trading a particular strategy is, number one, you actually can get enough retail traders trading a strategy for it to have an impact on the market. It's not that hard. Like, the threshold that you have to get to start having impact is way lower than everybody thinks. Pretty much every institution that is out there and wants to execute in the market will have some impact on price that they have to factor in and consider. So a group of retail traders, especially a group as large as ICT traders, can absolutely have an impact, right? But it's that square root law thing, right? A little bit kind of helps you. But too much, you start creating that square root law, it makes you vulnerable to this. And we have some anecdotal evidence for that in the ICT thing. Because if you go and you look at the performance of the strategy, it was doing really well until basically the YouTube channel took off. And like, as soon as there was like one day where there's just a huge increase in subscribers for some reason. And as soon as that happened, the strategy like lost every time. So, a trade getting popular a little bit kind of helps it. Too much kills the strategy. Yeah, the edge would actually be front running the ICT traders. Yes. So if you think that there's they're going to come across a fair value gap, because normally the way that they trade it, like, their favorite setup is there's going to be a break of structure like this, and then a break of structure like this, and then there's going to be like a fair value gap somewhere in here. So there's going to be a gap in there, and it's going to come back across that gap and then go higher. And so they want to buy it here, right? So if you think that they're going to buy it here, then the idea would be to buy it before that fair value gap occurred. But the issue with that is that in order to get a price lower than that, you would have to be buying like way back over here. So you could potentially just be buying. I don't know. Like, I think that the issue is that if you get it like this, right? If you're putting your order down in here, you're not front running them, right? So how do you front run them and get a better price? I don't know if it works. And what if it, maybe the way that it goes is it does that, right? So what I'm saying is, that there's an imbalance short today, right? You wait for that to happen. Come across. Here's the gap. He comes to the bottom of the gap. They're going to buy it up, right? And then I want to sell it right here, so that when it comes down and they all have to bail below the gap. Because this is something that is going to go down anyways, because there's an imbalance of sells, but because of that setup and the retail traders that get involved, it becomes a stop run and it will be a lot faster. And here you have an opportunity to get a better price too. Opening range, orb strategy. How would I play the orb strategy? I mean, the orb is a funny one, because the way that orb works is it starts out and it does this, and it will say this is the opening range, right? So then when it breaks the opening range, they want to be long and hoping that it does that, right? But what often happens, we draw another opening range here, as it does this, right? Like, so I'm not sure how you game that one. But I think that the most clear setup like this would be when there's a key level. Like, we have these projected ranges. Those actually work pretty well. But especially when it's one that's like complete nonsense. Like floor pivots. Right? You have floor pivots. Here we're starting the day out, and we have floor pivots R1, R2, R1, R2. And then we're moving along, and we come to this. And then they say, oh, because we hit a floor pivot, it's supposed to bounce. But you know that they are selling because it's end of month and they have to rebalance or whatever it is. Whatever gives you that edge that there's an imbalance short, or maybe there was a piece of news. This is especially if there's a piece of news. You let them buy it up, and you just... Yeah, I would be selling it here. I would be selling it here in anticipation that maybe you get a little bit of a bounce, but it's going to smash that level. I love whatever that level that the retail traders are looking at that they think is going to hold, and there's an imbalance. Go short on the premise that that level is going to get smashed. And those have been some of my best trades. Like the ones that are really like you make a ton and they really look spectacular and they would make good clips and stuff. They always tend to be of that sort, where retail traders think that a certain level is going to hold for some reason and it doesn't. Because the thing is that they have this idea that, we have the market and people want to buy and sell based on certain levels. And so when it gets too low, then that's going to cause people to want to buy it, right? But the reality is that is not the way that most large institutions work. The way that most large institutions work is they say, I have this position and I want to add to it or take away from it. And they just have to work with what the market prices are. So if they come in and they say, I've got to sell 10% of this today, doesn't matter what, you're just going to sell it, and whatever price you get, because tomorrow it could be worse. And when that happens, those levels don't mean anything. The only thing that matters is whether they've sold all of their shares or not. And it's going to keep going until they've sold all of their shares. Right? So that's kind of the issue with some of these retail setups. Oh, you're just saying Orb is getting really popular? I don't know, man. I actually kind of think that there was a period like 2018, 2019 where Orb was probably more popular. But that might have just been one community I was looking at. There's this community on Facebook where there's this guy that was really pushing Orb and everything. And it started to become really obvious that this guy was just a charlatan. But, yeah. Like the funny thing about it all is that I really don't think, well, maybe I do. There's kind of this conundrum, which is like, if you want to get popular on social media, and especially in the day trading community, and how do you grab everybody's attention? And it seems like in the retail trading space, that one of the best ways to grab everybody's attention is to just show them that you've made a ton of money. And there's a group of people that just fall for that hook, line, and sinker, right? But there's a lot of people that, you know, if they just didn't say all of this nonsense, if they didn't make a big deal out of how much money they were making, or especially lying about it, then they would probably be just fine. Like the thing that tends to do in the worst of these influencers like this is their ego, is their narcissism. They just can't help it. They have to make everybody think that they're always making money. It's funny because when I'm doing really, really poorly, Stream tends to do better. I think some of the hate watchers went away. They lost interest in me. Because there's bigger fish. I do kind of see what you're saying though, Sam, that like I have seen an increase in the number of orb traders out there. But you know what will kill, there's two things that kill the orb trade, right? The first is low volatility, which is what we're going into right now, or what we're in right now, low volatility. And the second is a bear market. Because ultimately orb ends up being like a buy the dip sort, like if you really look at like retail traders, most retail trading strategies can be categorized into one of two categories. And one is selling volatility in some form. And the second is buying the dip. Right. So orb often ends up being, you know, we've got this opening range. It breaks out. It comes back. What do? You buy the dip in the hopes that it goes up, right? And so when we're in a bull market, just by virtue of the fact that we're in a bull market and we're moving up, this trade tends to work. Even though there's nothing predictive about this setup, it's just kind of a coincidence. But because of the market regime that you're in, it kind of goes okay, right? Like, honestly, there's a much better way to do it. No. What is the balance of buying and selling going to be that day? Is there going to be more buyers or more sellers today in the equities markets? And it's a bull run. The right play is just buy it as soon as possible. Buy it over here, right? That's the better play. You can get that one if you know what the future orders are going to be. But, you know, in a bull market, this kind of pullback thing kind of works. So the orb strategy like seems like a great strategy when we're in a bull market. But when you move into a market where volatility is really low, or it becomes a bear market, because in a bear market, what they tend to do in a bear market is they'll go up like this and then gadoosh, right? So they'll be buying this. It's almost like they come in and like one of the things I've noticed about markets that I think is really curious is that they are more stingy when they are selling. Like when you're getting into a position, it's like, well, you know, we get the price that we get. We just need to get in now. And, you know, what price we get, it doesn't matter because this stock is going to 10x and it doesn't matter, right? But when we're in a down market, then they get stingy. Then they say, well, you know, we bought this at $4. So to really make a profit and for it to have been worth it, I need $5. So I'm not just going to come in and sell it. I'm going to wait and try and coax it up into me first before I really show my hand and start selling it. And so you get a lot more traps like this on the downside where they'll go and find all of the things that were working in the previous market, make them happen, paint the tape essentially, you know, let them buy it up so that they can sell it. So then that strategy gets decimated when it's a bear market. And that's kind of what happened before. Was Orb kind of was a little bit popular before COVID, and then COVID happened and those guys got obliterated. And that community kind of died out and the ICT replaced it. It was really always price action though. So always price action has always been the most popular. which is kind of unfortunate because like the problem with price action is it's so vague and inconsistent and unclear that it's really hard for me to identify based on price action where all of the price action traders going to get in. I mean, ICT kind of is like price action, but regimented, essentially, right? So there are setups like that in ICT, but just overall price action, they're all going to read it differently. It's just a mess. It becomes noise. So there you have it. I need to pull out the pen more often because my handwriting has gone downhill. I tell you what. I like saying I tell you what a lot today. What's with that? But check this out. You want to see a line that works really well today? And look where our cost basis lines are, like right there. Following the channel. It is essentially market makers just wanting to hold it between those two levels because nothing's going on. Isn't that interesting? Maybe there's something to that inventory cost basis, huh? You can go find it at speculatorsset.com. By the way, you guys want to see what I was working on yesterday? We got to an okay place. I don't know. I'm at like, I think I'm like to 800 lines of code, so it's not like too big yet. The amount of stuff that you've got to do just to get it to draw things. Like, there are so many of these little structs and stuff that you have to create for all of the settings and to set your pipeline up and everything correctly for drawing here. But totally works. Totally works. I got a window with a file menu, a quit button that doesn't work, a grid, and then with images drawn directly on the graphics processor in each one of those things, each one of those cells. I almost, you know what I'm having an issue with is like if there's something that's kind of hard and I get to that point and I do the hard thing and then I lose all motivation after that. Okay, I finished one hard thing. Now let's avoid moving on to the next hard thing. What is the next hard thing? Planning, refactoring. Yeah, it's all in like 2 files. So I think I need to split things out. And that's because I don't feel confident enough in my kind of understanding of Rust code to know the best way to split things up. Anyways, and then drawing a simple chart. I think that we can do that. I don't think that one is too hard. But then we get into like loading data. Loading data from a market provider, doing Python. I don't know. Maybe this goes faster than I thought. Because that was like a day and I have today to do it. Maybe, you know, I doubt that I'll be done with these by the end of the week. because I'm a lazy piece of crap, but maybe it's possible. Maybe we're getting to a spot. I don't know, man. I like, there are some days where I'm like, this is making my own trading platform. This will be just the greatest thing ever, right? But then there's this other part of me that's like, yeah, nobody's gonna buy your platform. Nobody's gonna be interested in it. You should be spending your time with something else. What would you spend it on? I will go all in on this until I find a better idea. That's what I'm gonna do. That's what I'm gonna do. Okay, so the spoos are pretty much doing what I said they would do, which is that they are attempting to claw back those losses. And sure enough, they have gotten to and then kind of bounced off of where the at the money options were implying for the projected range. Maybe that, you know, I said I don't think this is a good basis for a trade, but we had bought it at 13. Oh, wow. That would have been an amazing trade. That went from about 13 to what? 41, 31. Well, it's like a 20-point winner. That's not bad. That's not bad. I should just keep this like, because anybody that comes in here that's like first timer, they're gonna come in and look at this chart and go, "Oh wait, he has this line and it's following that line really well, huh?" Even though I think it's such a silly, simple thing, but man, it just seems to work. Seems to work. Yeah. Okay. Here's a post thought that I see on Reddit from r/xrp. Let's just accept it at this point. Crypto is trash. Fed rates reduced equals crypto down. Trump China meeting good equals crypto down. ETF released, crypto down. Find the cure to cancer, crypto down. Nothing will move XRP past $4. I am out at entry. I'm telling you, man. The cryptocurrency people have paper hands. It seems to me that cryptocurrencies are moving based on whether it's risk on, risk off. And for some reason have not been participating very much on the risk on side because like the people that wanted to buy it already bought it. Maybe I should be more concerned for cryptocurrencies. Here, so we're at the top end of the range again in ZN. I guess we will stick around for another. Every time I'm sitting here, I'm like, you know, maybe we should just end early today. I don't know what I would do, but we'll see. But then I get yapping, and now it's been 12 minutes. We might as well just go until 9 o'clock, right? Might as well. r/startups. This person says, this is the worst period ever to build a startup. I've come to firmly believe after more than one attempt that this is by far the worst time to build a startup. Anyone claiming otherwise is lying in plain sight, and I am sick of reading about these lies every now and then. Sure, tools make building easier, AI, VoIP coding, and so on, but that's exactly what's killing startups. It's now almost impossible to build a moat. Every product market fit, difficult per se to find in a solutions oversaturated world, turns into a red ocean in the blink of an eye. Before you even manage to build a main value proposition and get early traction, 10 other ventures are already doing the same thing, burning money and making any roadmap to profitability useless. The only remaining way to build a moat is through distribution and distribution only, while it used to be a mix. And that's the most plutocratic asset of all. Those who already had customers have money, and those with money can afford to lose more of it, or longer, even in a red ocean. To some extent, this has always been true, but now it's 10x, maybe 100x worse. Newcomers' efforts are fragmented. They never reach the critical mass to become something meaningful. In the best case scenario, they get acquired early by incumbents just to speed up existing processes, so nobody really profits from the initial risk. As a job, when you weigh risks and opportunities, building startups is becoming less and less viable. Is that a sterile complaint? Yes. Is it wrong? You tell me. The moat has never been in the code. It's foolish to think you can protect your business by writing the best code. That's true now as it has ever been. Nothing has changed. So if I were to turn my thing into a startup, that probably would be the problem. Like I think that it would be very, very difficult to duplicate my application. You would really have to have big spend. You have to have a big spend. And you'd have to have really technically competent people. And you'd have to have, somebody technically competent people that really, really understand the markets and trading. There's a lot of stuff out there that like some people kind of make it on their own, but you can't really get it through the platforms. And so I think that there is a market for it. But if I did it and I started to have success with it, probably other platforms would start to do it too. And there's no moat. I definitely see this. The company that I was working for during my 6-month contract, one of the applications that we worked on was an application that essentially did live translation. Teacher would be speaking and then it would translate the English to Spanish, and the kid asked a question, it would translate the Spanish into English. And every other day there was like some new startup or even Google themselves doing live translation. The only advantage that they had is that they had like equipment in the classrooms. So that's your moat, I guess. It's not a very strong moat. It's just an augment to your existing product. So you have all these grandiose ideas about where your business can go, but those things kind of limit your upside. I think that with the right funding, you can still have startups and fund great ideas. But right now, there's not enough cash available for these things to really work. Why are startups always presumed to be IT? It's like startup is synonymous with some coding thing. Well, in the past, most startups have been a coding thing. Maybe in the future, that will not be the case. Like, I think a really good example of a startup are EEMF. They are building a demonstration plant in Wyoming that shows a new, more environmentally friendly way of processing rare earth chemicals or rare earth minerals. There's acids and chemicals and stuff involved. And that I think is a pretty good moat. You got like patents, and there's a process, and there's all of these regulations and stuff that they've had to file. They have like a demonstration plant that they're doing, right? So that's something that other people won't be able to duplicate. The era of thousands upon thousands of cookie cutter software as a service startups is coming to an end, killed by an ocean of slop and vibe-coded clones. Good riddance, if you ask me. The day can't come fast enough. Okay, but like we need jobs for people. I hear this over and over again. 2 years ago, capital dried up. That was the worst time to build. 5 years ago, pandemic shut down the economy. That was the worst time to build. 7 years ago, rates were climbing and we thought everything was crazy overvalued. Fewer startups were getting all the money, and the bubble was all the talk. Talk to the companies between 08 and 14. Go back to the years following the dot-com crash. Software was basically over in many people's mind. There's only room for a small portion of startups to succeed. Invariably, it comes down to those who work harder and smarter with a sprinkle of lucky and the grifters. If it's easier to build now, then you either build more faster or reinvest in distribution. Markets are now global, capital is everywhere, and the industry is much more mature, meaning the risk downside is minimal. It's a great time to build if you want to do something that's both hard and meaningful. But I do feel like that it kind of raises the bar for what's a good idea. So I don't know if you guys are familiar with this, but I am the star of an anime called One Punch Man, and they've really did me dirty in the most recent season. Really poor animation. It's just sad. It's just sad how bad this season is, and so now some fans apparently have decided that they are going to remake season 3. Like, you doing their own animation, maybe some AI and everything, taking what they already made from the show and make a better season. That's interesting. Yeah, it would be copyright infringement. Bet you they'll still do it, though. Wow, what? My roommate found a job after 2 applications while I've sent 100 with no luck? Well, but if you're out of school, okay. I graduated in July and have been job hunting 100 applications, got 800 interviews, which led nowhere. She was employed and have been working for 4 years. She wanted to look for something else because her job was too boring. She barely had the time to quit before she already landed a position. Well, okay. You're both in tech. I could see that one. And you're still like in school. I think one of the things I've noticed is that like so if you're coming out of school, there's like maybe 40% that aren't getting jobs, which is crazy, but the majority will get jobs within a year. I think that one of the issues we might be seeing is that a lot of the people that are getting frozen out of the job market are older. Could there be some age discrimination involved? Maybe. But it's not really that they're discriminating against them because they think that they're too old and that they'll do a poor job. They're discriminating against them because they have to pay them too much. You expect more for that experience, and the companies are at the moment are not. Most companies, at least, are not saying, "Oh, well, we need more experience." Yada yada yada. No, they want to do things as cheaply as possible. Got ghosted by a big tech company after being referred internally. You know what? Being referred internally at a corporation means jack squat these days. Because if the referral did better, then they'd call that nepotism. So, like, what happens is they'll put your name on it so that if you get hired, they get the bonus or whatever, but it doesn't get you past the ATS or to the interview or anything like that. Smaller company, different story. And one of the things I'm finding is, so it's showing me a lot more stuff from those subreddits now, because I'm clicking on them. Here's a person, I've applied to over 400 jobs. Yeah. Some people apply to a lot more than others. I can maybe do 5 to 10 a day. And I don't get how these people are doing like thousands, but they're probably using AI and just throwing it at everywhere. And so probably most of those applications were completely useless anyways. 72% of devs believe Steam has a monopoly on PC games. Oh, they absolutely have a monopoly on PC games. I don't feel like that they've abused it, but they absolutely have a monopoly on PC games. Really? Microsoft has racks of NVIDIA GPUs sitting idle. Billions of dollars of hardware powered off, not broken, not missing parts, just unplugged. The AI story used to be simple. Faster chips, bigger models. That story's over. The news story, electricity. Every data center needs the power of 1,000 homes. 100,000 homes. That's not a typo. And you can't just flip a switch. Power infrastructure takes years to build, years to permit, years to connect. Microsoft, Google, Amazon, they're not worried about getting chips anymore. They can buy those. What they can't get is instant power. So what they're doing Google's restarting nuclear plants. Microsoft locked in 20-year nuclear power deal. Amazon's buying land next to power substations. They're not tech companies anymore. They're becoming power companies. Wall Street's still obsessed with NVIDIA and AMD. Meanwhile, the smart money's moving to boring companies that will run generators and transformers. Yeah, I think that electricity is the place to be right now, too. But like, we're going to need the electricity either way, right? Even if the AI bubble pops. I should have been paying closer attention. We did break out of that range a little bit more convincingly. Not to the 29.5, but it's a possibility before we leave here today, isn't it? I don't really have any excuse for not taking a trade today other than that even though I thought that maybe... Well, actually, I find this move up a little bit a little bit odd because really I thought that the S&P 500 would try and claw back some of its overnight losses, which it did do. So that would typically tend to be, if we went with the correlation with equities, that would cause treasuries to sell. But the treasuries did not follow that correlation. I do not see any move in the currencies. I do see a bit of selling in gold. Gold is definitely selling. But other than that, the other markets are all pretty quiet. So now I'm not, so there is a little bit of an imbalance in the market orders. Like, I would say that there probably is a mild meta order coming in here in ZN, but who can say what it actually was, what's creating it, right? Because there's no correlations with anything else. There's no news or anything like that. It's anybody's guess. So I don't think that I would have traded it, but something does kind of say to me like, you should have been involved. Well, I guess here's the point where you could get involved and say maybe 29.5 is going to be reached. But given the volatility regime that we're in, I think that what is likely to happen to you is that they fall a little bit short of that. So the risk for ticks, I don't really think that that's worth it. Here's another interesting one. Offshore developers are now 50% of our team. I have no work-life balance. I feel like I'm constantly being compared to these people for my job and pitted against other US devs on the team to save our jobs from them. Is this happening to anybody else? Our team hired multiple new offshore developers and were told this was to help reduce our workload. Our story points have been getting reduced to 0.5 or 1 point for tickets that take days per request of higher ups. Oh my gosh. Dude, if higher ups are determining what a story point is, that is like the biggest red flag for a developer. That is like the biggest red flag. Is that because the whole thing about story points is for them to be used for planning and not necessarily for them to be used by management for performance metrics. And when management starts to use them for performance metrics, it ruins the planning of it, right? Like when numbers become targets, now you're kind of incentivized to like rate the story as more story points than it actually is, so that you look good to the higher ups. And then you're getting too many story points, then they're going to say, oh, story points are actually worth 0.5 now. That's exactly what's happening. So where you work sucks. Straight up. So we have to work like dogs to meet average criteria. It is turning into an every person for themselves kind of culture where I feel pitted against others on the US-based team. when before these offshore people came, it felt like an actual team. Feels like we're all fighting each other and offshore people to keep our jobs. I was up for promotion this year, and so far the higher-ups have denied my promotion 3 times now and again this month. Because apparently hiring people from another country to work at 1/3 to 1/4 the cost is more important than US-based workers who have been at the company for years getting a raise. One of the offshore devs told our team he is planning to work his way up to software architect at our company when he introduced himself to us because he is inspired to move up at our company while none of us get a raise or bonus this year because now they're delayed again until January. Every day when I wake up, all I can think about is when they will let me go. Dude, this guy, I feel for you. Forsaken Roll 4787, I feel for you so much. Where you work is a shithole. You should be putting out 5 to 15 applications every day. You should be trying your very hardest to get a new job because where you work sucks. Every day when I wake up, all I can think about is when they will let me go. Devs who have been on our team longer than me are now competing against me. It feels like to see who will be the one that gets laid off. I feel like instead of being able to focus on my job, it's a bloodbath competition of who can churn out the most work possible to save their job from new offshore hires, replacing them. Is this happening to anyone else on this sub? Well, I've seen similar things, but not anything nearly that dramatic. That's terrible. Name and shame. No, it's dangerous for you to name and shame. If I was like a middle manager or something like that and directors came in and said like, well, okay, we need to make story points worth half or something like that, I would tell them that's a, like, how do you deal with that sort of an issue, sort of a thing. But that's a situation where I would just straight up tell them that's the stupidest fucking idea I've ever heard. Like, you do that, I'm not going to be here very long. So I never read this comment, but Man Meat says today feels uneventful. Yeah, well, I mean, we got a little move though. If we had been able to predict that move, those are kind of the best moves for us. So wasn't terrible, and you would we did get a good buy in ES. I wish that I had kind of put the risk on that one, because I think I made a good call there. It's just, you know, how good of a like a prediction of order flow actually was that? I'm not sure. But I'm starting to think I'm able to make calls like that consistently enough that I am in some unknown way predicting orders like that. Oh, I mean, in terms of data and releases. Yeah, well, and we do have more data coming later this week, right? Like tomorrow we get ADP, don't we? ADP is probably going to be a pretty big market mover. So, and there was this whole talk, or remember the discussion yesterday was about when will the government shutdown end? I think that there is a good argument that after the elections today, Democrats have less of a reason to keep the government shut down. But I'm not entirely convinced that that's enough to do it. So, I think there's still a scenario where it will be well into next year. And so until then, there's going to be a lot of days like this, because we're not really getting very good economic data. And that is an interesting thing for us to discover about markets, is that the economic data releases is responsible for more volatility than we realize. It's not like we didn't think, oh, it doesn't affect it at all, but it really went to like the market is completely dead in treasuries especially. So those economic releases are responsible for a very large portion of volatility. I wonder if it's kind of this thing where, like, you know, there's endogenous volatility just created by, you know, people taking on positions and getting stopped out and whatever, right? It seems to me that having more fundamental volatility created by economic news releases increases the amount of endogenous volatility, or vice versa. Yeah. A friendly recommendation you could highlight in a short when you take a trade showing the entry. You know, I could. And then like only show people the ones where it worked. And I have done that from time to time. But most of the time I just don't have the time or energy to make a short like that. Suppose that's something that I could do today if I had taken a trade. Think that, well, I'll be programming. Well, I'll give a good look to trying some more applications too. A little frustrated when I never stopped putting during that whole 6-month period. But during that 6-month period, I think I only interviewed 2 or 3 times. And I found it difficult, you know, to fit it in with the day job, you know? But then when that ended, when it was ending, you know, there was a bunch of applications that I put out like that last week that resulted in interviews. And those have all kind of died down, like I'm waiting on the next step and probably I'm going to get ghosted, you know? And the applications that I've put in since then, I haven't gotten any bites from that. So it's kind of weird that I got so many that one period and now not. But I'm hoping that a lot of that was Halloween and everything, and that there'll be more jobs here at November, Tuesday. So maybe I'll spend a little bit more time on that today. Add to that, I say you need a full day to record all day trading ES and NQ DOMs, doing some trading with a bunch of constant market realizations and explanations, kind of like we do here oftentimes, but with slightly more structured video. Well, no, I think that what would probably be the coolest thing that we could do would be to make a weekly recap, right? Go through all of the main headlines and how the markets reacted to that and the things that we did. And if I built a good story out of it, probably that could work. Maybe I should, because I record all of the video. That's something that I could do, like, oh, I don't know. I could cut parts out during the week and everything. But I would need to be a little bit more organized to do that, which would also be a good thing. So let's try our best to track that and see what happens. But I don't know, man. It's tough to... A weekly recap would be good. I'm not sure of the scalability of that one, since many retail traders and the like wouldn't care as much, I don't think. Be good with those people who care, perhaps? Well, yeah, I mean, that's the big issue, is that it's really hard for me to point at something and be like, that's it. That's going to work. I know that that's going to work. I can put all of my faith behind that one idea. Because the truth is we try so many different ideas that don't work. And, you know, knowing where to put your effort is the hardest one, especially when all of the opportunities seem kind of like, meh. Like, honestly, there's this bit that's like, okay, we're going to try 20 different ideas to help the YouTube channel grow. And one of them is successful. And then I'm going to say, oh, okay, this is the thing that works. And I'm going to go out and I'm going to tell everybody, hey, if you want to make your YouTube channel bigger, what you really need to do is make weekly recaps of your live streams. But maybe it was just pure dumb luck that was the thing that took off. You know? So I think that whether I put effort into something, I think it ends up being a major, or the major factors behind that would be how interested I am in doing it, how much it fits in with my existing skills and time. So recap is something that at least this week I think I have the time to do. But nothing's happening. Like, it's such a dead week. Today is such a dead day. Hey, tomorrow is going to be different. We're going to have ADP. And then I can talk about it. Maybe people will like it. Let's see. And in the meantime, today, work on the platform probably a little bit more. Trying to refactor it and do like a full chart instead of just a little triangle. Where is it? Oh, never mind. They didn't quite get to the 29 half level that we were hoping for. And what about E-mini? Still doing its thing, huh? Now here's some people talking in Discord. Michael Berry has puts on Nvidia and Palantir. Toss Your Salad says 13 months too early, maybe. I guess, again, the issue is when it comes to retail trading, because what I'm always told is you've got to find product market fit. You've got to find this audience. You're going to try a thing and then see if people like it. But then there's one issue is that You can't just post one video. You have to try consistently over a long period of time for the algorithm to even give you a chance. And for enough people to find it and stuff. If we were going just off of that, then we should just continue to do the live stream because you guys are here every day. Every day, and that's consistent. And that's been the only thing that's really been truly consistent like that. Anyways, it's almost like it's trying to limit you on the number of ideas that you can actually try to figure out what actually works. Right? Spoos are turning a little bit. Anyways, where was I going with that? You got to find that product market fit. But for me, I think it's more than that. It's like we've got to find stuff that people are both interested in and helps them. Because like what people are interested in, I just show a chart. No, how much money? Actually, I did kind of do a little bit of a video like that, and I think everybody snoozed on it. I showed them, you can predict it's the end of the month. They're probably going to sell. They did. Hard. On Friday. Or was it on Friday? Yeah, it was on Friday. We still got 10 minutes. I'll keep reading some of this stuff. Hi, developers. I needed advice 2.5 years ago. I was headhunted by my current CEO. He needed someone to build the main value proposition, and we arranged for me to work PT hours paid by the hour as he was paying me out of pocket. I was laid off for downsizing not too long before that, so I saw an opportunity for some income while I looked for a job. Quickly after that, I began working full-time hours. Remote, still pay by the hour. We started growing and hiring non-developers. I'm not going to be humble. I have great technical skills, and I was also the one to set up our processes, infrastructure, emails, team communication, product management. I designed the product. I called the shots with the SEO, marketing emails, content marketing, customer retention, onboarding. Basically, I owned the product. This is my CEO's first business. He's young and fresh out of college, but is well connected due to wealthy parents. I have quite a bit of experience, not with people or sales, but with development and marketing. Slowly but surely, we get customers and start scaling. Fast forward to now, we're a team of 15 full-timers with all the revenue going into employees. Everyone is on the hourly rate, yet nothing has changed for me. It only got worse. His budget for developers is incredibly low, only wants to hire very cheap offshore juniors, then fires them after a few months because they aren't delivering what he expected. Luckily, I picked and interviewed 2 developers who fit nicely with our team and are still with us, even though everyone is paid by the hour and can't really take a day off. He expects us to be available every day. Well, so the issue I'm seeing here right away is you didn't get any equity. Recently, I started noticing problems. I have a whole lot more responsibility than when I joined, but my salary hasn't changed at all. I'm still the same rate as when I joined. I don't get PTO. I don't have equity. I basically have no financial motivation for the company to grow. I still make decent money from my COL, but that's when I don't get sick or don't have a vacation. Of course, last year there was no Christmas bonus and no Christmas paid time off because of low profits. Second problem is that my CEO started ignoring the roadmap that he and I planned. Wow, this is a long. I don't think I am going to read this whole thing. If you were never officially given the title of CEO and it wasn't on your offer letter or contract, then no, you weren't. What title? Yeah. Oh, he's asking, is he CTO? No. You're just the developer. There is no CTO. If you were doing a startup, you should have, set that up early. Instead, what happened is this guy has gotten cheap labor from you. Well, maybe not cheap labor, but he got labor and didn't have to share any of the equity. So he's gonna continue to do what he does. Yeah. Find another gem. Jeez. This has so many red flags it would put a Chinese military parade to shame. That's so funny, dude. All right, thanks for well, you've been here all week, man meat, so thank you for watching. It's not your product. You have no equity. It sounds like you don't even have a real employment contract. Wonder Boy CEO could decide at any moment to get rid of you, and you'd have no defense against it. If you take time off without responding, you'll get dismissed. You've allowed yourself to be taken advantage of every step of the way here and spent a lot of time and effort building something that someone else totally owns. Let me say it again. It is not your product. You don't own shit. Harsh. Sorry, but true. I would be gone yesterday. Have a backbone. If you're really so technically brilliant, then you should have little trouble finding a real job. OP responds, you're right. I own absolutely nothing. Still sucks as I built it. But you're also right that I allowed him to take advantage of me and disrupt my vacation to fix issues. Sucks. Jeez. And I mean, it kind of sucks that the whole thing is that he was in a position like that where he needed the money bad enough that he would, that they got in that situation in the first place. I heard about the 996 hustling that's happening in Silicon Valley, and someone posted this paper. This is a culture problem. Productivity cliff, where science contradicts hustle culture. Stanford University economist John Pencavel conducted landmark research revealing what's now called the productivity cliff. His study found that employee output falls sharply after a 50-hour work week and plummets dramatically after 55 hours. Most strikingly, workers putting in 70 hours per week produce essentially the same output as those working 55 hours. The extra 15 hours yield virtually no additional results. Research from multiple institutions corroborate these findings. A study analyzing work hours and productivity found that an increase in working time by 1% leads to an increase in output by only 0.9%, indicating fatigue effects even at moderate hours. Another comprehensive analysis estimated decreasing returns to hours worked of approximately 50%, meaning productivity per hour declines substantially as hours increase. I was really hoping that there was going to be a actually we should only work 32 hours. That's the most productive. Oh well. Okay, well, we'll do one more quick look. JP Morgan Delta One desk remains tactically bullish. the lack of all economic data is irrelevant, as nobody has any idea where we ultimately end up anyways. Trump demands nuclear option, warns Dems will win midterms and next election if filibuster not terminated. That basically is saying that Democrats are undermining the economy enough that it could affect the midterms. Mag 7, the first cell signal in a year. Okay, well, not too much there. We are seeing the S&P kind of retrace that initial buys, so this is kind of like the buy the dip area. So we'll see where that how that goes. I'm not seeing a huge move in other markets. Bitcoin is maybe starting another push lower though, so we'll see there. Oil looks like they're buying oil pretty aggressively. So that's something you should keep an idea on. And there's an election today, so we'll have plenty to talk about tomorrow. All right, so guys, I will see you then. In the meantime, stay excellent, team.